Hello ForexMilitia, this is Preston. In this video I'm going to show you how to use Fibonacci extensions and Fibonacci retracements to find the targets of the big banks. Get ready to get armed and dangerous. Okay, so here it is. These are the indicators. These indicators, most of them are just on the default settings. The MACD, the zigzag is not on default settings. This is basically the only number you have to change. You have to change that to 5. The water pivot, or the 9 EMA on the close, and the average true range, which is on default 14, and then the Fibonacci extension and the Fibonacci retracement. These are the two target makers. The first thing that I would want you to do is draw support and resistance lines, basically using the horizontal line that's on your MetaTrader 4 or your MetaTrader 5. Make them different colors so that you can tell the difference about which time frame that is coming from. Okay, so with that, to make it more accurate, I would want you to switch to the line chart, because normally it's on Japanese candles or the high-low candles, but on the line chart you get a more accurate way to place your support and resistance lines. The support and resistance lines you can just leave at, sometimes you see people put like red as a resistance line or blue on the bottom to basically show support. But when you place them on your monthly and your weekly, your monthly should be one color, maybe like green or something like that, and your weekly should be all one color, which is, I use magenta or pink or something like that, so it really stands out. After you place the lines, I want you to adjust them a little bit. I want you to adjust those lines to fall upon the 0, the 25, the 50, or the 75 lines. Like, I'll show you when I get to the charts, but it's pretty self-explanatory. So you're basically going to put on 1400 or 1425 or 1450 or 1475. As far as the yen pairs, don't put it on 1494 and 000. Not like that. Put it on 1400 and 1400 basically, or 1500. Okay, the indicators that you're going to add are the water, the MACD, the ATR, and the zigzag. All right. And then what we're going to look for is what I call the BBD or the BBR, the big bank dip for long, or the big bank rally for short. So these are basically pullbacks. You're going to look for a pullback so that you can have your retracement or your extension have its targets printed. Okay, this is the setup for the BBD BBR. The MACD crosses the 0 line. Once it crosses the 0 line, wait for a dip to go below the Wadatar weekly, if you're trading the daily time frame. The weekly, if you're trading the daily time frame. One thing I did not say is I trade the daily time frame mostly. So this works out for some huge pips. If you are going to trade on a lower time frame, then like something like the 4 hour, you would basically trade, you would look for the price action to dip below the daily time frame. Now the Wada Atar only has indicates the pivots for the monthly, the weekly, and the daily. So if you go below the 4 hour time frame, then you will most likely have to use the 9 EMA to basically find when a dip is actually validated. That's how I validate my dips. And so with that, let's go to the charts and see how to place these Fibos. Okay, so here we are on the charts, and okay, so here we are on the charts, and I am going to go ahead and show you how I basically place my support and resistance lines. Right now I'm on the monthly chart, and like as you can see, these the yellow and the blue line are the Wada Atar, but the green line is the line chart, and this is what I basically do. I set that up, and I go in, just correct that. That's on 14, so I'm going to put this at 25. I'm going to change the color to a greenish. There you go. And then up here, I'm only going to show you a little bit. I don't make this this video too long. This is green, and I'm going to put this under 140. Okay, that's on the monthly. Now on the weekly, bringing it down. Let's see, where are there some, let's bring it out just a little bit more. Let's see, and now I'm going to change this to magenta. Yeah, that should be, there's that. And I'm going to change that to magenta. And then I'm going to open it up again. And I could have did this all in one shot, but I guess that's how my mind works. 75. There we go. So there you go. This is just for this area over here. You can see that there's some other spots that you can put some of the lines, but that's it for now. And then I'm going to switch it back to the Japanese candles. Go back down to the daily. Okay, so with this, now what I'm looking for is for this to happen. Zoom in. A crossover of the 0 line to basically happen. And as you can see, I have my 12, 26.5 and my ATR at 14. I guess I'll have to zoom in for you to see that. Anyway, this crossover here, this is what you're looking for, the crossover. And then what you'll do is you'll pull the Fibonacci extension off and place it. Alright, So here, the target that I get is the 60 is at 127.07. There's also, here's something that I don't know if you guys knew. On the Fibonacci tools, basically the retracement and the extension, if you go into the properties, and what you do is next to the line description, you put in the at sign percent dollar sign at percent price, and what you'll have here is you will get the price at which the Fibonacci retracement or the extension is located at. So that's something that I learned a while ago, and you can just do that for each and every description, the 250, the 200. These descriptions actually will, on my Fibonacci retracements and extensions, I normally don't go with the normal descriptions or the normal levels. Instead of the 1618, I put 150. I also put the 200, and instead of the 2618, I put 250. So that's something that is different from what the default setting of the Fibonacci expansion and the retracement actually have. So I leave the 618 though. Okay, so with that, this gets a target of 618 of 127.07. All right, let's go back so we can basically take a look and see if these targets actually have some validation. Let's see, that one. All right, and as you can see, this actually went up to this level at the 618. There was confluence, this right here and this right here, and you see it didn't exactly hit it right on the mark, but it went past it, and you could basically take your target, take profit, and then it will retrace. And then it came to this line again, the weekly resistance, the weekly resistance, and then it reversed. Okay, so that's not such a fantastic example of what I'm trying to prove here. So let's try another one. Let's do this one. Let's see how this one plays out. Okay, as you can see, you have this here, this here, this here. As long as this crossover, you see this crossover right here on the MACD, is within the range of this zigzag here and here, you can place your extension. So I'm going to place it, and we're going to see if there is validation on this move. Alright, so as you can see, it does hit this target, that's pretty much a 100% move from taking this pullback. This is a BBR. This was a big bank rally into a basic dip. As you can see, it crossed over this right here, the Wada Atar pivot weekly, crossed above there. So that is a validated pullback, a BBR. And then what I would do is, to make sure that you get a decent risk reward, is to check this out, see if the ATR over here is 102. And usually when I'm basically placing my stops, when I take these trades, I go a 1.5. So an ATR of 102 with multiplied by 1.5 is about 153. So I want to get at least a 1-to-1 on that. So I want to make sure that this basically goes to a 153, and it does not. So I would not take this trade. I would not take that trade. Moving over here, I probably would take this trade because it did pull back. But this is not a BBR. This is more like a natural retracement. Okay, so here we have it. This price action moves down to the 150. It moves down to the 200. It hits that. It comes back. It goes all the way down to the 250. And okay, so that's that one. Let's try another one. Interestingly enough, this one hits exactly on top of the 61.8. Hits on top of the weekly resistance, and it comes right back. So that's interesting. And let's try another one. Another one with some distance. There you go. That one has some distance. Let's see what this one looks like. Okay. Now once again, there's a pullback. The ATR on here is 91, so this would be like 130. And I would look to see if it would basically hit, not this here, we would be looking to see if it would hit the 618, and this is pretty far. That's like 500, 600 pips. So I would hold it until it hit that target, and it actually does hit that target, and then it retraces. Does it hit it again? It hits it again, and what it does is it actually uses this as support for a little while, which is pretty decent. Of course, as you can see, it does break through a little bit, but it comes back, it hits that again, and then there's a bit of a rejection. It hits it again, and then after that it follows through, it comes through. And the interesting thing is, after it hits this, it moves back up to the weekly resistance. So it's pretty much trapped in a range over there. All right, let's pull up another one. This one is good right here. Okay, and with that one, as you can see, there's a crossover here and a dip right here, which takes it below the Wada Attar pivot weekly, and the ATR on this is 111, about 111, 108, so that'll be about 150. And I'll be looking forward to reach this target here, which it does, and you catch it right there, and pretty much there's your target. Now it hits the 61 very frequently. It hits the 100 less frequently, and then it hits the 150 even less frequently. I am continuously monitoring this to actually get you guys some hardcore numbers on the probability of it hitting those targets. Here we go again. This is another BBD, Big Bang Dip. Okay, set that up, go right there, and as you can see, it hits this first target. This is 130 or something like that, and you would probably come in, probably be about here. So that's about 190, so it would have to be about 190 for you to get in. And here it says this is 203, about 204. So this is a trade. At least you would at least get a 1-to-1. And then if you wanted to trade another position or go further, you would get most likely a 2-to-1. That's 392 pips. And then look at that. Pretty nice. It went to the 150, which is also right here on top of a monthly. I couldn't say if it's a it would have to be a resistance since it's below. So a monthly resistance, and then it goes to the 200, and it hits and it pulls back. So that's just a small look at what the Fibonacci extension will do. The retracement is a little bit different. I place it usually after the MACD crosses over and you get this BBR or this BBD, then I start placing retracements, and that would be on the next dip or rally. So here I place this here, and you can see that it goes up, it goes to here. It would hit a lot of these targets. So you could take, but you would most likely have to make sure that you get the proper risk reward when you're taking these trades. This doesn't look like an actual trade to me on that I would basically take, because there's not enough risk reward in it to actually hit my first take profit, which would be about here. Now that's interesting. What is the ATR is 75, so that would be about 103, 108 or something like that. And yeah, see that right there? That's only 73. I don't know if you can actually see that, but it's only 73. So I probably wouldn't take this trade, just to keep my risk reward proper. But as you can see, it does go. Interesting. You can most likely stay in the trade if you want. But that is a small look at what I basically do, how I trade the Fibonacci extension, and then of course the Fibonacci retracement. Hope you like that. Hope you like that in my video. And as always, knowledge is power. With this knowledge, you have power. Power to the people. See you next time, next video. Like, comment, and subscribe.